Welcome back. So cues across Asia are actually pretty okay. Most markets are trading higher. Let's get the implied open up for us and see if we can continue our winning streak, because it's been a good run for the Indian market. And there we go, getting about a 30-point lift up at the open. At least that's what the indication is at this point in time. As always, plenty of stocks to focus on. So let's straight away get to it with our research team. Here's the CNBC-TV18 list of top stocks to watch. Guys, morning. Lots of pharma names in the news. So let's start off with Ekta. Ekta, why are you watching out for Fortis?
Well, yes, Fortis is in focus because they've signed a collaboration with Ekana Group in Lucknow. And this is for the management and operation of a 550-bed Greenfield super speciality hospital. So they will be managing this particular hospital once it comes up. It's the third major presence for the company in Uttar Pradesh. It joins their network of hospitals in Noida as well as Greater Noida. So I expect the stock to be in focus on account of this.
All right, Ekta, thank you very much for that. That is Fortis in focus. Aether Energy is the next one we're going to focus on. Sudarshan is here with details. Sudarshan, this is data coming out?
That's correct. So Aether Energy has been seeing a move higher recently, and recently it had hit the high of 450, and it's up almost 30% from the listing price of rupees 321. Now in the month of August, company is set to outperform some of the incumbent players as well as Ola as far as the registration data is concerned. Now, as of August 20th, total registration stands as around 10,248 units against Ola's total registration of 9,522 units. So we still have 9 days to go in this month, but registration of Aether Energy is almost at the same level that the company had seen in entire month of August 2024. What do brokerages feel? As per Bloomberg data, 4 brokerages have the coverage, and all of them have a buy call with highest target price is 480 and lowest target price is 450 per share. And that's the reason I'm going with green for Aether, mainly because of registration data for the month of August.
Okay, all right, sir. Thanks a lot for that. But there's a big trade today expected on Clean Science. Hormuz joins us to tell us more. Hormuz?
Earnings are over, block deals are back, and promoters of Clean Sciences are looking to sell stake. A couple of promoters plan to sell up to 24%, and that is a deal valued at over 2,600 crore rupees. The floor price is at a 13% discount to yesterday's close. Now, the promoters, multiple of them, hold close to 75% stake in the company. Now, the selling entities, one of them has a 12.8% stake, the other one has a 2.6% in individual capacity, and Krishna Boob, the HUF, has a 3.04% stake as well. This is as per the June quarter shareholding pattern. If you take a look at Clean Sciences, the stock is up around 30% from its IPO price of 900, but from the post-listing high, which is well over 1,600 rupees, the stock has corrected almost 30% from those levels. So a large trade in the offing. Expect the stock to start off in the red.
Okay, all right, Hormuz. Thanks a lot for that. I'm keeping an eye on India Cements. Now, Ultratech Cements board has approved selling around 6.5% stake in India Cements by the OFS route, which will happen in the next 2 sessions. Ultratech holds close to around 81.5% stake in India Cements as of June 2025. So this helps them comply with the listing regulations. It comes down to around 75%. The floor price more or less in line, mild discount to yesterday's closing price, and the total deal size at the floor price will be around 740 crores. Now, Ultratech, in their con call, they sounded very bullish about South India. They also made that comment, South could be the new North. They spoke about India Cements going to the 4-digit unit EBITDA by FY28. The street was happy that India Cements, in fact, turned around, but they were, talking up the market. So 1,000 rupees per ton is what they're talking about. And now some on the street say, we know the reason why, right? They spoke up the South market, and now, in fact, they're going ahead and complying with that. So we'll have to see whether or not South is the new North. But for the time being, India Cements could be a little under the weather because of this OFS overhang. So keep an eye out on that one. Moving to Hormuz. Hormuz, couple of large trades yesterday. V-Guard and HCG. Promoters cashing out again. Tell
Indeed.
us more.
Yeah, promoters did cash out on both V-Guard and HCG. It was a partial. Starting off with V-Guard, where the promoter Chitilapalli Thomas Kochus sold around 82.5 lakh shares at 370 rupees, and part of that stake was purchased by ICICI Prudential Mutual Fund. As per the June shareholding, ICICI Prudential Midcap Fund had around a 2.5% stake in V-Guard already, so they are amping up their stake in the company. But Healthcare Global, BS Ajay Kumar, the promoter, sold around 14 lakh shares, 660 rupees was the price, and and they, B.S. Ajay Kumar had a 10.5% stake in individual capacity at the end of the June quarter in Healthcare Global, and this entire stake was purchased by Axis Mutual Fund, whose name does not feature in the June quarter shareholding pattern among the funds that hold more than 1% stake in the company. So the promoter selling overhang may remain, so may start off in the red, both of these names, but may end up seeing some recovery considering the funds that have bought this stake.
Okay, all right, Hormaz, got it. Thanks very much. So all of those stocks on our radar. Vinny is joining in. She's looking at a bunch of order wins and a very interesting management appointment at Arvind Fashions. Vinny, morning. Tell us more.
Good morning. So let me start with those order wins. Firstly, for RailTel, they've secured 2 orders amounting to a total of 50 crores. The first one is of 15 crores. This is from the Higher Education Department of Odisha, and the second one is a 35 crore order from Kerala State Information Technology Mission Department. So that is what will keep the stock in the green today. Jupiter Wagons, that's another one that we'll be keeping an eye out on. The subsidiary has received a letter of intent worth around 215 crores for supplying of wheel sets for Vande Bharat train. Next one, keep an eye out on Godrej Properties. Now, they've emerged as the highest bidder of around a 7.8-acre land parcel in Hyderabad. So furthermore, increasing their presence in Hyderabad, and the project has an estimated gross development value of around 3,800 crore rupees. And lastly, in terms of the appointment that has come in for Arvind Fashion, we'll see green coming in here as well for the stock, as Saiko Das has been appointed as the Chief Brand and Strategy Officer. Previous stint, he was working with Levi's right now as a senior director there, and under his leadership, Levi's has actually emerged as the #1 apparel brand. So overall, that's a positive sign because he will work towards Arvind Fashion's strengthening its brand-led growth going forward. So that's why green expected for all the 4 stocks.
Okay, all right, got that. Thanks very much, Vinny, for all the details over there. Well, let's quickly recap our list of stocks to watch. The ones that have positive news flow this morning would be Fortis Healthcare, Ather Energy, RailTel, Jupiter Wagons, Godrej Properties, and Arvind Fashions. Stocks with negative news flow would be Clean Science, India Cements, V-Guard, and HCG. Okay, now that's our stock list for the morning. But with that, it's time to focus on the first corporate conversation on the show. And it's coming in actually from the pharma space. We'll get to it in just a minute. We should be having the management of Aurobindo Pharma with us in just a bit. You know that the stock in the company has been on the radar. There have been reports about, the potential inorganic growth at Auro Pharma. So let's find out if this is indeed happening or not. The company has been in the news for looking to acquire Prague-based Zentiva for a valuation of as much as $5 to $5.5 billion, which could be one of the largest M&A deals that we've seen in India. Mr. Santhanam Subramaniam, Chief Financial Officer of Aurobindo Pharma, is with us. He's with us on the phone line to take a couple of questions. And 3 important points that we're looking at is whether the company indeed is looking at that acquisition or not, and of course, what the business outlook is. Mr. Subramaniam, thank you so much, sir, for taking the call. And that's really the first question. There's a lot of excitement in the market. Are you looking at this Prague-based entity, Zentiva?
Thank you, Vinay. See, the company as a policy, we don't comment on the speculative news articles. Okay. So having said that, we at any point of time evaluate multiple acquisitions and inorganic growth opportunities. Because as a global company, almost all acquisitions in the generics and our product space does get shown to us. We are extremely mindful of our investor concerns and have never overpaid for an acquisition.
Okay. But, sir, can you give us some more color on, you are clearly looking at inorganic opportunities. So what areas, what are the product synergies, and whether this particular company, Zentiva, whether it somewhere fits into your overall strategic scheme of things?
Now, of course, as I said, as we given the clarification to the stock exchange yesterday, it's in the too premature stage and it's very difficult to talk about it. Having said that, we are a global company having major presence in US and Europe, and certainly this asset being placed in Europe, it does fit into our scheme of things.
Okay, so that's an implicit. I'm not going to say it's an implicit yes. You told us what you wanted to say.
I think we have been seeing many assets. It doesn't mean every asset we are buying it off.
Of course. You mentioned that word concern, Mr. Santhanam, and that's the Subramaniam. So $140 billion in net cash. The size here is about $5 billion. The concern is, managing the size of this acquisition in terms of leverage, etc. So would you want to address it?
No, it's not a major issue. I'll tell you why. We have been growing, and every quarter we have been, if you really see the last 3 quarters, every quarter we have been generating about 100 million cash every quarter. And we have enough balance sheet strength, and today, as on date, there is no leverage at all. And we are having an overall cash of around 140, and certainly this cash is expected to go up. And any acquisition will look into the multiples, EBITDA multiples, and whether it is a EPS accretive or whether synergies are there. All these factors we'll take into account, and then we will do that.
Wouldn't this make Aurobindo highly leveraged, Mr. Santanam? I mean, this acquisition, if this were to go through in this shape and size, what we're hearing, but of course reports.
No, it is not leveraged at all today.
No, but if you go in for this with $140 million of cash, $5 billion size acquisition on the other side, I mean, the gap is too large. You'll have to raise a lot of debt, right?
No, it all depends upon the business also. No, it all depends upon the business and the ability to generate cash. What is the EBITDA? What is the synergies? Everything you have to look into that. No.
So, sir, you're not ruling out the possibility of looking at an entity where the size could be as big as $5 billion. You're open to looking at something as big as this, right?
Yeah, nothing wrong in that, no?
Okay.
All right. Mr. Subramaniam, hi, this is Ekta. Just wanted to narrow down on the size because there is speculation that it might not be $5 to $5.5 billion, and there could be a 20 to 25% discount to this valuation. Is that correct?
We don't want to comment on the speculations at all. No, first, we are not commenting on the overall big numbers, which you have said at the beginning, and now you are saying whether it will be right at 25%. So we don't want to comment on this, actually. Okay. We will, whatever we do it, we will see there are 3 guiding principles we adopt. We will see as much as possible, we will ensure that EBITDA multiple is always single digit. That is the first. Second, we will see how it is accretive, EPS accretive at the earliest. So we will look into that. Third, what is the significant synergies we'll get from any combined operations? Sure. We look into that. Without these things, irrespective of even if the value is very low, also we may not touch it.
Sure.
So these are all the guiding principles. We will work on that.
So that is exactly the concern, and I want to revert back to the fact that, the street is concerned about the fact that this is a European-focused business. The company might lose focus when it comes to, say, its core business of US operations. And again, the debt is going to be a concern, especially when the company is operating at margins of 19 to 20%. So would the company probably reconsider such a large size in terms of an acquisition based on the feedback that you're getting?
Ekta, you must be knowing, if you are really seeing how we have been operating, each verticals have been identified and it has been operated by an independent CEO. It doesn't matter whether if I grow Europe, it doesn't mean US is getting a back. Not getting the importance. Or if US is growing, it doesn't mean Europe is not getting an importance. Not like that. Every vertical, every market is having a different set of management, CEOs, and they will ensure that the businesses in their domain are growing without any impacting the other businesses, other verticals.
All right. The other point I want to narrow down on is Europe, because you have evaluated Sanofi's European business in the past, if I'm not mistaken, and now you're looking at Zentiva. Why is Europe becoming such a lucrative option for Aurobindo? Is that because you want to mitigate your risk when it comes to the US simply because of the kind of uncertainties you're facing there?
Nothing like that. We just completed the Lannett deal in US itself. See, 75% of my business comes from US and Europe. I have to do it there only. Unfortunately, or whatever may be, we are not having a major. We are not even having a good presence in India market. So other 2 markets only are there for us. We have been doing it there.
Mr. Subramaniam, 2 questions, sir. One, how much of what you sell in the US currently do you produce in the US?
I think whatever we are producing in US, mostly produced in India only, but we have a plant ready in US which can produce around 15%, can go up to 25% also ready. We are waiting for the approvals, product approvals that come. We are waiting for some other approval from the regulatory authority. Once it comes, I can start in Q2 end or Q3, anytime I can start.
Okay, so you have the capacity
Land acquisition also we had, which is having a capacity of around 4 billion units. Today they are using only 1.5 billion units. So there is a scope for 2.5 billion units, and plus with a very minimal capex in very low double digits, I can take it to another $1 billion capacity. So I have the flexibilities and options to increase my manufacturing capability in US if required.
Right. Now, my question is, by the end of this year, FY26, if you sold 100 rupees worth of products in the US, how much of that 100 rupees can you make in the US by the end of this year, say after these approvals, etc., come through?
I think it's off the cuff. I don't have the ready-made answer, but off the cuff I can say I may be able to do around 30 to 35%. I may be able to do that.
Okay, 30 to 35%. Just one last question from my side.
I need to validate the number. I don't have it.
Off the cuff, of course. Just an estimate. There was an order from the White House a couple of days back. I think this was last week, which essentially mandated that US, in terms of critical APIs, US needs to stock up on at least 6 months. They need to have 6 months worth of stock. Does this provide a fillip to your business, sir?
Yeah, because we are always having at any point of time, we try to maintain more than around 3 to 4 months stock always. So it's not a major issue for us.
Mr. Subramanian, if you could just, going back to Zentiva, could you tell us, we're not saying that you've narrowed on the target and whether you are or aren't doing it, but as of now, you've studied the company, you know the business. What is the complementarity, if at all, and what is the revenue sort of potential, and what about the profitability of this entity? Can you tell us a little more, because this is something you're studying, so it would be good to share with your shareholders.
Your questions are very relevant, but see, whenever we talk about any business or target, etc., we enter into confidentiality agreement. So I'm not supposed to talk about the numbers.
Okay.
Your question is very relevant. You have the relevant question, no doubt.
All right.
But so by when? I understand you're saying you have entered into a confidentiality agreement. So that confirms that indeed those talks are on.
No, when you enter into NDA only, you'll get the information memorandum.
I understand, sir. So by when? How long does this agreement start? Till when will you study this target? By when can we have a definitive yes or no?
I think as you said, it is very premature. Maybe it may take another 2 months' time.
Mr. Subramaniam, just one question. But if you're interested, you will pay a single multiple, right? EV upon EBITDA, because as of now, $5 to $5.5 billion for an entity that's making 467 million comes to around 11 times. But I think one of the comments you made was, if you're interested, you won't pay in double digits. You'll pay high single digit, correct? EV upon EBITDA?
I think you're right. Absolutely, your calculations are right. And
correct. So then that will be around $4.3 billion if you're interested. If you're interested, you'll pay less than 10 times, which will be around $4.5 billion, very, very roughly.
Can I complete?
Yes, sir. Please go ahead.
I do not know about the accuracy of the numbers, so I cannot comment on that.
Okay, sir, just before we let you go, give us a sense in terms of the kind of debt that Aurobindo will be comfortable to have on its books. You ended Q1 with $884 million in terms of gross debt. How much are you willing to have on your books in order to make such a huge acquisition?
I think what we can see, we are also sitting on a cash of around $900 million cash is also sitting on the book, right? Yes. Both in Europe and US, all put together, we are sitting on a 900 million cash. So long it makes sense. I mean, debt is not a major concern because we have been generating cash quarter on quarter, and we are confident of generating cash. And our ability to bring debt at a very low price is all there. we'll be able to bring down debt anything less than 5% 5% to anywhere between 4 to 5% should not be a problem, right? And there are bankers who are very, very, very happy with our balance sheet, the way we manage the things. So debt is not an issue at all for us.
Okay, just before we let you go, I wanted to just get your sense on three things. One is your status on the UGR 3 plant, which has an OAI, as well as your New Jersey plant, which has an OAI. What is the status of remediation for those, as well as your PNG facility? When do you expect it to scale up and break even?
Okay, the first question, UGR Plant 3, you already in our earnings call, we said we have invited the inspectors to do the inspection, re-inspection. So as and when it happens, we'll let you know, okay? The second thing is in terms of the US facility, we said the product approvals that come, etc. We are waiting for some clarification or some approval. We can start anytime in Q2 or Q3, depending upon when we want to do that. Subject to getting the necessary regulatory approval, we can do that. In terms of PNG, yes, we have done really well. We have been ramping up really well, and the productions are improving day after day, every day. So I think, as I told you in the earnings call also, Q3 we will come and, we will be able to demonstrate very good numbers for the PNG, as I told you.
All right, Mr. Subramaniam, thank you very much for taking our call and patiently answering all our questions, and really appreciate it. And we hope you'll come back on again when you have something to announce. As you said, right now there's an NDA, so you can't disclose very much. But I think we got a broad sense of how you're thinking about this entire situation. Ekta, thank you very much for taking us through that conversation.
Thank you.
Take a quick commercial break here. We're going to come back with Deepan Mehta of Elixir Equities for some fundamental stock conversation in just a bit. Stay tuned.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Thursday morning, we're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, good morning.
Hi, good morning, folks. You know, it's reading so well, it's sounding so good.
Yeah.
Because these days when we look at the markets and the headlines, it's US markets on a 4-day down streak and the Indian market on a 5-day up streak. So the tables seem to have turned. Don't want to jinx it, fingers crossed, but it's been good going.
Well, that's right. You know, I was thinking about that. Outperformance after a while, right? We were getting used to the 6-week losing streak. Then we broke that and we are bracing for another winning streak. So, you know, pretty good morning.
Let's whisper it. Let's say it too loudly. Anyway, but it's looked good, right? I mean, 5 days in a trot, and that kind of almost basically cuts through the 6-day losing streak that we had earlier before that. Now, this is, of course, the Wall Street action, and we were pointing this out yesterday morning as well, that maybe, at least the fear is that mega-cap tech in the US is at the brink of a correction. Then we had Lawrence Belanco yesterday during the day, in the morning actually, and he said, well, you know, a stock like NVIDIA, which is the poster child for tech AI, mega-cap AI in the US, is close below the 20-day moving average. So that's typically a bit of a signal. We'll see. I mean, we've had many of these dips which get bought into. And by the way, even yesterday, while those rates are what they are by close, they were off the lows by quite a bit. So Amazon, Apple, Intel, etc., all up on your screen in terms of what they finally closed at. So that was the action. And I think, at least in terms of just the action from here, it's very much is focused on what the NASDAQ and within the NASDAQ, those 7-10 stocks are really going to do. The 10-year yield was down about 2 basis points, 4.3%. You had FOMC minutes which came through. Majority of the officials, at least the minutes tell us, this is the July FOMC, majority of the officials see inflation risks outweighing employment risk. Later today, we have the Jackson Hole Symposium. And it'll kick off, and I think the Fed Chair Powell's speech is only tomorrow on Friday. Trump called on, and this is, of course, the attack on the Fed, right? Trump called on Federal Reserve's, one of the governors, Cook, to resign after allegations of mortgage fraud. She, of course, firmly pushed back on this particular allegation. The idea is this, right? Another vacancy at the Fed essentially allows President Trump to place another dove who will be more than willing to lower interest rates. That seems to be the play. But markets, of course, have gotten used to this. By the way, a Wall Street Journal article this morning which kind of talks about the attacks on the Fed and how they perhaps are intensifying. Oil prices are the only other macro variable in focus. They're up about 2%. We ended about at about $67 per barrel. Now, I'll just circle and tie in the levels here where we leave off. So market's been up for 5 days in a row. Actually, last 2 days, the price action has been pretty similar. Slightly sideways, 940, 945, and then the market kind of perks up and goes up again. So these are the levels. 25,160 is the 61.8% retracement. We, I think, left off about 100 points off that level yesterday. So that's the first one. Immediate support is the 40-hourly exponential moving average, which is the 24,847 level. So very, very close by, about 0.5%, 0.75%, 1% within from where we left off yesterday. Bank Nifty, day before yesterday, closed almost exactly at the 20-day moving average. Yesterday it closed lower. So basically it's kind of sold off from the daily resistance levels, daily averages essentially. Here immediate resistance is 56,156, which is the recent high. And the next resistance is the 50% retracement level, which is 56,267. So these are the two resistances. Again, very close by. I'm not even going to the 61.8, which of course will come into play once we take these out. Immediate support is the 40-hourly exponential, like the Nifty, which is 55,600, and then 55,450 levels come into play as well. GIFT Nifty gives you a quick sense of how we likely to start. More than anything else, the breadth, the kind of mid and small cap stocks which have been rallying over the last couple of days has been pretty impressive. It's not like one sector, it's not this or that sector. It has been very disaggregated and really across the board. So that's, and we'll put out a lot of these stocks here over the next 30, 40 minutes going into market open. 24 points higher on the GIFT Nifty is where we stand. But futures and options, how are things stacking up? Nigel, over to you.
Well, in a matter of few trading sessions, India has gone from the underperforming market to the outperforming market. And that's the feel-good factor, right? But today is the crucial weekly expiry. And we'll brace for some volatility in the final hour of trade. So will it go to the bulls and bears? Well, we'll know as the course of the day does progress. Now, in yesterday's trading session, the Nifty, there appears there were some shots that covered out for the market on the whole. Though on the Nifty Bank, that appears to be the shorting candidate. And the shots are heavily stacked in the Nifty Bank. And it's been underperforming. So the bigger short covering bounce will come once the Nifty Bank, the shorts out there, they do see some kind of release. And in trade yesterday, the FIs, they went ahead, they added some short positions. Keep in mind that we have bounced 700 points from the recent low, and the FI short in percentage terms is still at around 90%. So that massive short covering that we've been waiting for, that's still due, right? Because, the FI net short positions continue to hold at elevated levels. Moving to, the options data then, the PCR has moved gradually now towards the higher end of the range. So around 1.3 is what it is at. Normally, you have seen it peak out at around 1.6 or thereabouts. So it's closer to the upper end of the range. But the call writers, they still believe that they've got this covered and higher levels will be protected. So between the 25,100 call and the 25,050, there were close to 90 lakh shares that were added out there. And the premium that's been eaten into in yesterday's trading session was roughly around 40 to around 60 rupees. And though you got the direction right yesterday, because the Nifty ended in the green, but the premiums did decay, telling you that the call writers, they are very, very aggressive at that level. Though on the downside, you did see some put writing. So the levels for the day, going by the kind of put writing we saw at the 25,000 put, well, the 24,900 mark, that's the crucial support mark that you're looking at on the downside. And we ended in this resistance zone. We need to get past this 25,100 mark. It's the extremely important mark on the upside. If we can trade above that, then the bulls will fancy their chances to see a bit of a spurt towards the end of trade. So 25,100 becomes the crucial mark on the upside. And you know what? Another encouraging aspect in the last few trading sessions is on a day-to-day basis, you have the Nifty that's gradually making higher highs. That's good news, right? So for today's trade, first you'll want to get past this 2589 odd mark. The Nifty Bank, that's facing resistance and in that zone of around 20 and the 50 DMA. So it's a couple of 100 points away from those levels. Once it gets past this zone, which comes in at around 56,200 odd, then the Nifty Bank will join the party. Stocks that I'm looking at, well, yesterday we were telling you midway through the day and towards the end as well. PG Electroplast, the massive addition in terms of open interest from the high yesterday, the stock did come off and it's likely to come in the FNO band. That's precisely what happened. So that's back into the band. The bulls will want it at least to defend the recent low, which is a good 10% away from current levels. The other stocks that I'm looking at is we're due for the Nifty announcement with regard to the changes and stocks that could come in. And brokerages, most of them, they estimate that both these two could be part of it. Interglobe Aviation and Max Health. So this announcement is due. I'll keep an eye out on both these two stocks.
Okay, we'll keep them in mind for sure. By the way, folks, just wanted to point out that CNBC did a special edition of the Fed survey, the Wyoming edition. And Kevin Hessett's name has come right on top in terms of who the next Fed chief could likely be, even as Mr. Trump now trains his guns on Lisa Cook, alleging that there is a mortgage fraud. So never a dull moment when you're talking about the US president and the US Federal Reserve. Well, Asian markets, actually, just to quickly wrap this up, are slightly mixed, but there's more green than red for sure. You can see the Hang Seng is flat. The mainland Chinese markets are doing very well. Japan is the only major market, like yesterday, is seeing a little bit of red. Now let's move on to the equity call of the morning. Venugopal Gare of Bernstein says that their broad analysis yields that we're looking at a potential turnaround phase for consumption in India. He says the increased policy focus this year, which started from tax cuts and extended to rate cuts and now GST relief, further signals the government's intent to boost this part of the economy. He says they upgraded staples to mild overweight last month and durables to overweight earlier this year. They stay selectively overweight on pockets of opportunity in other discretionary areas like QSR, retail and auto. He says they will continue with those calls while staying equal weight on utilities and underweight on industrials. So it's full throttle consumer for Bernstein. That's Venugopal's call coming in. Let's quickly welcome in Matt Orton, Chief Market Strategist at Raymond James Investments. He's with us. Matt, always a pleasure to have you with us on our shows. Thanks so much for joining in. And hey, we were just saying this. It's good to see a reversal in the headlines. India on a 5-day winning streak. The US market has been cooling off. But actually, I just want to get your sense on what you're hearing. This fall in US big tech, is there something more to it than just some profit taking after a stellar run? Or do you see any new rumblings in the US market as we get closer to the second half and those inflation concerns, some of those worries take over?
Hi, good morning, Surabhi. It's always great to join. And it's been certainly the talk in U.S. markets of whether this sort of momentum unwind that we've seen, which has been pretty sharp and painful over the past few trading days, whether this is a trend or whether this is something that's very short term. I think this is more shorter term in nature. I was certainly encouraged by the price action later in the day today in the U.S. that you started to see buyers coming back. But I think it's just a confluence of a number of factors. You had some of the really crowded, very, very small names that had recently IPO'd. They reported more disappointing earnings, and I think just highlighted that the market got a little bit too far ahead of itself. And so it just cascaded down to a number of tech names and a lot of profit taking and very thin trading in the US. But buyers are stepping in because one of the key themes we've talked a lot about before is using downside opportunistically. And I think you're seeing a lot of investors who have missed some of these names or missed being able to have exposure or increase their exposure to those names finally had an opportunity to do so. So I suspect trading will be choppy given all of the macro catalysts that we have with the Federal Reserve and speech on Friday. You've got the big US jobs report on September 5th. I think until we get through that, we'll likely see some churning in the market, but I don't think that's a longer term trend. And I've been encouraging clients, and I myself have been using that sort of downside to add to some of the higher quality tech names in the US.
I put out this factoid, right? NVIDIA is about 8% of the S&P 500, maybe a little less than 8% now. So highest ever, I think, going back 30, 35 years now. Matt, news out of China, and by the way, the Shanghai has hit a 10-year high. So quite amazing there in terms of the move. And looks like there is a bit of a retail move building. Well, the mainland market anyway is driven by the local retail investors. And of course, but the other big thing out of China is this entire anti-involution, right? cutting out capacities across the board, refining, chemicals. I think some petchem stocks are higher this morning. What do you make of it? And any implications do you see in any sectors?
Yeah, Prashant, I'm really glad you brought that up because I think that anti-involution policy from the government has been overlooked by a lot of investors. And you know how I think about China from the long term. It's just, I don't love China longer term, given a lot of their policies and refusals of the government to really take massive steps needed to get consumption going. But this is a marginal step in the short term to really help combat deflation. And I do think it will help boost corporate margins, at least in the short to medium term. So when you add that sort of policy to a lot of the big tech giants in China that have actually reported really strong earnings over the past quarter that look very, very cheap relative to some of the US AI tech names, I think putting all of that together makes it more of a compelling short-term trade in emerging markets. We'll see if that can last over the longer term, but I think investors are starting to catch on, and that momentum is just going to start to build over the next few months, I think.
All right. Hi, Matt. Morning. Good to see you. And as always, you have been quite optimistic on prospects of India. However, the last time around we chatted, you said you're not rushing in right now, going by the valuations and going that the globe is in a bit of a tizzy. That said, you must be buying select stocks. Name a couple of them for us.
Yeah, Nigel, I've been fortunate that even though the market itself has been down, a lot of the bigger names we've talked about, with the exception of ICICI recently, have done incredibly well. I mean, the jump you had in Interglobe and M&M, those have been really encouraging. Geo's done great. So when I've looked at this, I added a little bit to Eternal when it had sort of a pullback after its really stellar earnings report. I love the quick commerce business model. And so I would look to use downside there opportunistically. One name that hasn't really performed well, but I think leans into a very durable long-term growth theme, especially for India, given where it sits geopolitically, is defense. And so Hindustan Aeronautics is the name I've been watching closely. The fundamentals look very strong. Management execution is very, very good. The need for increased helicopters is there. So I think that's a name to potentially add to, just because the actual underlying fundamentals are quite strong. And staples is an area that started to run a little bit after the GST announcements last week. I'm still not convinced that the jumps in the names are there. The rationale for why they should start to run is there, but they've disappointed for so long. The fundamentals have not followed. And so what I want to see is at least a strong earnings report. I want to hear from management teams that the GST is actually trickling in to increase orders, perhaps their ability to increase margins. And then I think there could be some long-term durability. So I'd rather be later to that trade, but add to some of these, secular growth themes that are already in play right now should we get any sort of weakness.
Matt, great speaking with you. Thank you very much for your time. Really appreciate it. And speak to you soon again. Well, let's just quickly run you through the interactions, the stuff which is lined up here over the next 2.5 hours. 9 o'clock, we'll have Abhishek Kumar of JM Financial Institutional Securities to discuss the key trends in the IT sector. 9:20, Nimesh Chandran of Bajaj Finserv AMC will be a market match today. 9:35, management of Walcott comes up, talks about their demand trends. And following that, Arun Shukla of JK Lakshmi Cement will be speaking with us at 9:45 a.m. to discuss key GST reforms and demand trends. Towards the end of the program, it's the economy. Lata speaks with RBI MPC external member Saugata Bhattacharya on the minutes of the last meeting. That's coming up.
Time to take that short break. We've got a lot of stock-specific action track for you on the other side. We'll get that in just a bit. For the time being, I'm highlighting them. Fortis Health, Ather Energy, Railtel, Jupiter Wagons, Godrej Properties, and Arvind Fashions. All of them will be reacting to positive news flow. On the flip side, Clean Science, India Cements, V-Guard, and HCG will be reacting to a bit of negative news flow. Take that break, come back, get into further detail on all of these names. Welcome back. Hope you're having a good morning. Well, we've told you a little bit about the equity markets. Let's hop across to Manisha, who joins us to tell us about what's going on in the commodity market. Morning, Manisha.
Morning, Nigel. Thank you for that. Well, we started on a positive note, at least for energy and the precious metals as a sector. For energy, the crude oil prices have gained 2% overnight. The U.S. crude inventories declined by 6 million barrels. Street was anticipating 1.5 And then the markets are monitoring progress towards Russia-Ukraine peace deal. Remember, the crude oil prices already are down by 10% this year until now. This is also as the OPEC and allies continue to restore the idle production there. What also has done well has been gold and silver prices up 1.5%. Platinum is up 2.5%. Well, all these markets clearly are going to watch the Jackson Hole meeting for further cues coming in. The decline in US dollar index also seems to be supporting many of these precious metal prices. What is not doing so well has been the base metal prices. It's a 3-month lows for aluminum, 2-week lows coming in for copper and zinc as well. We also are seeing declines for steel and iron ore prices. The weak Chinese data, some bit of a choppiness because of the tariff concerns. And then, of course, ahead of the Jackson Hole meeting, you're not looking at very high volumes or newer positions being built at this time.
All right, Manisha, thank you very much for that. That's commodities in focus there. What are the brokers saying this morning, and what are the stocks that they are covering? Sud is standing by with exactly that. Good morning.
Morning, Prashant. So we have two stocks where coverage has been initiated. First one is Bajaj Finserv. Jefferies has initiated coverage with a buy call and target is 2,450 per share. It says the company is going to benefit from first, lower rates, second, improving profitability in life insurance business, and third, profitable growth in general insurance business and proposed increase in motor third-party premium. And it believes that company may report 22% CAGR earnings over next few years. Next one is Hexaware. Nuvama has initiated coverage with a buy call and target here is 950. It says that company will continue to outgrow mid-cap and large-cap peers, and growth is going to be driven by first. It believes that revenue base of the company is in a sweet spot and it has a strong client base. Also, it has strong presence across verticals and services lines, and over CY 24-27, it sees revenue CAGR of 11% in dollar terms and margin expansion of more than 250 basis points. As far as valuations are concerned, it's in line with LTI, Mindtree and Emphasis. I've also taken the Jefferies return on NBFCs. It says that Q1 earnings were mixed for NBFCs, but going forward from Q2, there might be an expansion in margin, that is NIM, on a sequential basis. Also, that growth had seen moderation mainly because of sluggish economic activity, and stress had risen due to unseasonal rains. That also, it sees that it might reverse from Q2. And it's positive on SBI Card and Chola Investment, and top picks remain Bajaj Finance, Chola Investment, Shriram Finance, and also Muthoot Finance. It believes that it's a defensive play.
All right, interesting calls there. Hexaware and some NBFCs in focus. So thank you very much for that. Deepan Mehta is director at Elixir Equities. Deepan, good to have you with us here on the program, and apologies to have kept you waiting. We were speaking with the management of Aurobindo, if you heard that conversation. I have two questions for you, Deepan. One is this slight shift, which one is hearing more and more, that maybe consumer names will do better, and names like, of course, there's the quick commerce like Zomato, etc., which comes up, Trend, or maybe even Avenue Supermarts, which has been doing well lately. Do you believe that thesis, that there's money to be made here, that the sector has underperformed quite a bit? And the second one is pharma, but actually my question is, it's almost as if, because there's this overhang of tariffs on pharma, people are buying hospitals. It's sharp, of course, different businesses, but hospitals have done phenomenally well. So just wanted your thoughts there, pharma versus hospitals. But start with consumer names.
Yeah, Prashant, good morning and thank you for having me on your show. I think that we're very positive on all consumer-oriented stocks, excluding FMCG. And we've spoken about the segments. I think Alcobev is one segment. You covered it very well. I think Nigel's on the show. So that's one sector we're very positive on, very good growth volumes over there. Indian Alcobev companies, I think, are in a sweet spot. They can grow pretty well, create value next 2-3 years or so. And then within the other consumption-oriented themes, I thought retail, especially jewelry, did very well in this particular quarter. And the scope for improvement over there also is great. I think even at high gold prices, demand remains strong. And we're expecting a bumper festive and wedding season, so that should boost sales for them. And still, I think hotels, hospitality, and aviation still continue to do pretty well. So I think that we're very positive on consumer-oriented names. And no doubt, I think quick commerce and other stocks, they're still making losses. So that kind of, you have to have a longer-term view to really benefit from that. But nonetheless, I think they're great stocks to own.
Give us some names in hotels, Deepan. What do you like out there? Because the big leaders, Indian hotels, valuations aside, Street wants to pay more for it. It's seen those bouts of correction of 10, 15%, but yet the street bids it up. And yesterday, in fact, I had explained one stock for educational purposes, Taj GVK as well, which has been a rank underperformer. And potentially you'll have Indian Hotels that has a holding out there. We'll have to see what they want to do next with it. Tell us more.
Usual disclosure, Nigel, the dark horse over here could be Lemon Tree.
Lemon Tree.
I'll tell you why. I think because it's in that particular sweet spot where it caters to business travelers, holiday travelers, as well as, all other types of villages and related travel. And they're in tier 2, tier 3 expanding very quickly over there. Great expansion plans, as good as Indian Hotel, if not better, and really focused on management contracts, which can, generate revenues at extremely low capital employment. That's a well-managed company, reasonable valuations. So I think that, it may not be the best hotel company, of course, Indian Hotels is that, but it may turn out to be the good investment on a longer-term basis. Having said that, it's a company in which we and our clients are interested, and we'll be looking at buying into that stock.
Just to go back to the alcohol beverage space, our colleague Yash reported yesterday, and we'll pull the graphics up, Sula, which has basically just gone south, right, one way, and a lot of hopefuls. I mean, that wine penetration story is not played out, at least not yet. But Sula is looking at some of the harder stuff, entering diversification into whiskey, vodka, etc., by doing some acquisitions. That was the story we put out yesterday. Any thoughts here, Deepan?
No, I don't think so. I think, you need to have solid track record in terms of managing the environment, because end of the day, the alcohol industry is a very regional oriented industry. One needs to understand the kind of regulations, the pricing, distribution at the local level, manage the regulation over there. And I don't think Sula has been so successful. The track record has not been that great. I mean, look at what Radico Khaitan has done, or what Tilak Nagar has done, or what Allied Blenders has done. I feel more confident in those companies than Sula Wines. And I find it very surprising because I thought wine consumption is doing pretty well. They're one of the largest vineyards in the world, if I may say. That's what they say. So, and yet I think the performance is not coming through. So a bit perplexed about that, but we always remain hopeful. But for the time being, I'd give Sula a pass.
Deepan, actually, the data is pretty stark here in terms of the, it looks like, it would have done very well. But wine sales, wine as a category, has grown at low single digits CAGR over the last 3 years. That's the basic problem. But look at premium prestige brands, 15% growth last 3 years. Premium luxury brands, which is that elite segment, that's grown at 30%. So the category essentially seems to be a bit of a problem here. And I guess that's the reason why a company like Sula is looking at.
All I can say, Prashant, at the parties we go to, I see more and more women holding wine glasses.
Wine?
Never before. That's
actually true.
That's my empirical research, so to speak.
No, absolutely. Deepan, stay with us. Just coming back with more questions on the other side. We'll also get some technical perspective. Shilpa Raut is going to be with us with some technical trading ideas. Stay tuned.
Welcome back. Let's hop across to Hormuz. He's here to tell us about the big movers yesterday, which saw moves on heavy volumes, but not very, very high delivery. Hormuz, run us through that list.
Indeed, a lot of movers yesterday saw some outsized moves and on equally outsized volumes as well. You start off with Protean, EGOV, and the stock has been in the news considering the fall that it had from the highs, but yesterday it is up 15%. This is the biggest single day gain it saw since December of 2023, and it was yesterday that after the 30th of July that it closed above its IPO price of 792 rupees considering the up move that it saw yesterday. Almost 80 lakh shares changed hands in yesterday's trade compared to a 20-day average of 3.25 lakh, and in comparison of the number of shares traded yesterday, around 14.5 lakh shares were marked for delivery, which is around 18% compared to a 20-day average of around 1.4 lakh shares that get marked for delivery usually. Now, Carborundum was the other one the biggest single day gain on record, at least for the stock. Almost 50 lakh shares changing hands, 20-day average of just 2 lakh, and almost 13% or around 6.5 lakh shares were marked for delivery yesterday, compared to a 20-day average of around 1.25 lakh shares, which generally get marked for delivery. Nazara was an interesting one yesterday. It was, of course, on a news-based down move, almost 13 to 15% lower of the stock. The biggest single day fall since June of last year, and almost 1.1 crore shares changing hands yesterday, 20-day average of 6 lakh, but that 1.1 crore shares was the combined volumes of the last 20 sessions put together for Nazara Technologies, and almost 37 lakh shares were marked for delivery, which is almost 1/3 of the total traded volumes yesterday, compared to the 20-day average of just around 2 lakh shares that get marked for delivery. And another interesting one yesterday was Ikeo Lighting. It was the biggest single day gain since listing. It is a recent listing, this stock. It was 31 lakh shares changing hands yesterday, 20-day average of only 50,000, and 21% of those shares that traded yesterday were marked for delivery, compared to a 20-day average of just 25,000. And an interesting trend in Ikeo here is that between February to April, there are around 90 odd trading sessions that we saw. The average daily volume was around about 4.5 lakh shares, around that couple of months this duration. But since the 7th of April, the average daily volume has dropped from around 4.5 lakh to just around 70,000 shares. And since then, only 8 such instances as the stock has had more than 1 lakh shares trading hands in an entire day. So interesting movers coming in there, some of them on the back of some strong delivery volumes as well.
All right, no, interesting list, Hormuz, as always, and useful. Ikeo, there is Nazara, there is Carborundum Universal, there is Protean eGov as well, which moved, and I mean, some of the price and volume stats with the Hormuz as always. Now, Shilpa is joining us with the quick technical check on things in terms of what price action is telling us. Shilpa, 5 days on a trot, Nifty's been up. Nifty Bank, though, ended slightly lower yesterday. What's the setup and what's the thing to do this morning?
Good morning, Prashant and Nigel, and thank you for having me on the show. Talking about the setup, we see the FI's net longs is hovering around 9.5% right now. So I believe there's limited downside play. And for Nifty, a close about 25,000 is definitely a very positive trigger. Next targets would be 25,250 to 25,400. For Bank Nifty, yes, we are facing some sort of struggle at around 56,000 mark, but once a push above that, you will see levels of 57,000 again reclaiming. So Bank Nifty, any declines towards 55,500 should be an ideal opportunity to go long.
All right. Hi, Shilpa. Good to see you in early in the morning this time around. What about individual stocks?
Nigel, I have 3 buys. The first one would be a buy in Dabur. Dabur, we saw very high long OIs, added yesterday up to 18%. And the stock is trading around 536 in futures. I believe, it has given a good breakout above 525. So that should be a stop loss. And one can stay long for targets of 550 to 560 zones. The other one would be a buy in Unom India. Unom India also, we see that, it is giving a constant upside thrust towards, 1230 right now. So keep a stop loss at around 1200 and stay long. You would likely see levels of 1280 to 1300 zones. The third one would be a buy in Mastock. It also saw very high volume participation in the last hour of the trade yesterday. So I believe for levels of 2900, 2950 is definitely coming in, and keep a stop loss of 2730.
Okay, all right, Shilpa, got it. So all those stocks on our radar. Thanks very much for the calls. We need to take a break. Come back on the other side. We'll have the pre-open rates. And also, Abhishek Kumar of JM Financial Institutional Securities is going to be joining in to discuss some key trends in the IT sector. Welcome back. Some first initial trades have started trickling in. Let's see. The indication has been that we'll start at least 20-30 points on the upside. Let's get the Nifty up. Yeah, it's just about. Now my screen is shifting a little bit. So minor gains to begin. Yeah, that's absolutely in step with what the implied open was telling us. So let's wait for some more rates to settle, and then we'll get back to the screen. Dipan is still with us. Dipan, hi. We were just discussing the prospects of this large acquisition with the management of Aurobindo. I don't know if you got that conversation or not. So it's very clear that they're interested, but they don't know which way those stocks will go. If this indeed turns out to be a big acquisition, somewhere in the vicinity of $5 billion, is it going to be a negative?
Yeah, I would think so, Surbi. I think that the street will not take it positively. because the company will take on debt at a time when its core US business may be under threat. Any form of tariff on pharmaceutical exports is going to impact Indian pharma industry, and that may impact cash flows and overall balance sheet quality. So, and I think 5 billion is a bit too much for a company of Aurobindo's size. Maybe better options for the company, but per se, I think entire pharma industry needs to be a bit careful because these tariffs have really not played up to market's expectation. There was a time when we thought we get a really favorable deal, and now we're amongst the least favored countries. So I don't know what can happen in pharma as well. So I just want to, stay away from the sector for the time being, and then see how this particular threat evolves, and then maybe make a more, I would say, knowledgeable call.
All right, Deepan, I wanted your view actually on India Cements. I remember post the con call that Ultratech did, and everyone was talking about this line, right? That South is going to be the new North. So everyone was dissecting it, wondering how to play it. There was this one analyst who said, Nigel, the bride is ready. There will be an OFS that will come about. And, that comes to mind because Ultratech Cement, they're the best in class, in terms of capacity addition and turning around some of these acquisitions that they've done as well. And they've done that with India Cements. But now to meet that, the norm of bringing the promoter holding down to 75%, they're coming in there and doing an OFS and offering no discount actually. What's your view on this name? Because as of now, they barely broke even EBITDA-wise after many quarters. Market capitalizations around 11,000 crores with around 1,000 crores of debt. So you put it together, valuations don't justify it. But if they can do 1,000 rupees per ton of EBITDA in the next few years, as they promised, with maybe 10 million tons, then you're talking about it being valued at around 10 to around 11 times EV upon EBITDA. So your view on India Cements?
Actually, I just go with Ultratech because eventually it's going to get merged, as they have done with all their companies. So this is just a matter of, trying to meet a particular regulatory requirement. And no doubt they will turn it around, and it's a great acquisition and helps consolidating the industry. And that cement has been doing pretty well. Last quarter numbers are very impressive for the cement companies. And I think this particular quarter, September, may be a weak one because of seasonal factors. But we're looking for a very strong season for cement as well. So positive on the cement industry still. But I would say let's go with Ultratech itself, then India Cement.
Okay, so that's on the cement pack. Yesterday, Deepan, this move in Protean, that was noticed by a lot of people, right? Because after the big debacle, losing out on that very, very prestigious PAN 2.0 project, the stock had fallen off a cliff. And then this move came in yesterday. What are your thoughts? A lot of people would have still, been in Protean, and they perhaps did not cash out or sell out when this unfavorable news came. What would your recommendation be now?
Well, I think there's a great deal of uncertainty, and if something positive has happened, which we may have missed it by the stock rallied 15%, one needs to really see it. But it's not exactly a very cheap stock also. And this particular development is certainly not positive. So I would say that maybe there are better options within the platform space than maybe a Protean.
Okay, all right. Thanks a lot, Deepan, for joining in, giving us your view on a whole host of stocks. Wishing you a good Thursday, and we'll chat up with you rather soon. That said, let's turn our attention to the star of yesterday, the IT sector. That was the big outperformer. Now, JM Financial believes that demand may not bounce back rapidly. Tariffs and Fed rate cuts could be the trigger for a mean reversion of the multiples. We're now joined by Abhishek Kumar, the IT services research analyst at JM Financial, who joins us on the show. Hi, morning, Abhishek. Good to see you. And as always, what do you think? The reason for the bounce, the tech index has suddenly shown some signs of actually outperforming. Just in the last few sessions, it's falling less on bad days, and on good days, sometimes it does better. So what do you think? Are we bracing for a bit of a bottom formation and things start moving up from here on?
Yeah, hi, good morning. Thanks for having me here. You're right. I think investors were looking for where the bottom is, given the consistent flow of negative news. But what we have seen, first on just fundamentals, the 6 global companies who give guidance, which we track closely, Infosys, HCL, Capgemini, Cognizant, etc., all of them raised the lower end of their guidance in this quarter. So that's a very strong evidence that the worst that some of these companies were probably fearing did not play out. Nor do they expect it to play out in this year. So that's a good sign. And then if we juxtapose this with where the valuations are, if we look at the top 5 large cap IT companies blended PE, they are now trading at a discount to both Nifty as well as S&P 500, which hasn't happened in last 5 years. So put together, looks like the growth rates, etc., have bottomed. Valuations are very reasonable, and with rupee depreciation, there will be some support to the earnings. So all these make up for a good a bounce back, a potential bounce back in the sector.
The tech index in comparison to the Nifty, what is that number right now? As you're saying, that has narrowed down completely. In the past, we have seen it go, that premium go up to 30-40% as well, I recall, at peak levels. So what was it at peak? What is the median? What is it now?
So I don't have the numbers on top of my mind, but if we just look at the premium of the top 5 IT services PE versus S&P 500, it is 1 standard deviation below its mean, and it's actually at a discount. Same is the case when we compare large cap IT services PE with Nifty. It is below 1 standard deviation over the past 5-year mean, and now at a discount, 7% discount to even Nifty PE. So these are levels we have not seen, at least in last 5 years.
Abhishek, hi. Good to have you on the show this morning. So I was taking a look at your calls, and you do like several of the mid-cap IT names, more mid-cap IT than large-cap IT, and that's the only thesis that's really worked, right? Names like Persistent, Coforge, and I think these make it to your buy list as well. But even for a lot of the mid-cap names, Q1, the growth rate slowed down. Yeah, we've got your whole list up on the screen. Emphasis, Persistent, Coforge, Hexaware. For a lot of these mid-cap players as well, the growth rate slowed down. Coforge, itself. And of course, there was this whole issue about whether they're investing in data centers and whether that's, that's not entirely related to the base business. You think the thesis for mid-cap IT will remain as strong? Or have valuations now made the asking rate even more demanding, and therefore it could be a challenge to meet those expectations?
Yeah, so, I think the growth rates for mid-cap will continue to outpace, the larger peers. Coforge has a very strong momentum. Persistent is doing consistently well. At this stage, we prefer, Emphasis and Coforge, while we have buy on Persistent also. But I think we would rather prefer players where we have more valuation comfort. Emphasis clearly at 23x, FY27, looks reasonably placed. Coforge, if we adjust for growth, it looks cheap. It's a 30% earnings CAGR company over the next 2 years, trading at 30 odd times. So on a PEG basis, it is one of the cheapest mid-cap stocks. So these are the 2 stocks which are above in our pecking order. But overall, I think the mid-caps will continue to outperform large caps as far as the growth is concerned.
Coforge, I'm just sorry to press on this, but there was some news a couple of weeks back about one of their large clients, I think it was Sabre, if I'm not mistaken, where there were some growth concerns coming in. The company said there's nothing material to disclose. Any concerns on the horizon? I'm just asking because the stock has run up so much. So what should investors watch out for, if any red flags?
Yeah, in fact, the stock has corrected sharply after their Q1 results. And now the valuations are reasonable on a PEG basis. As far as the Sabre is concerned, there was a guidance cut. Obviously, the stock reaction was very sharp. But Sabre has gone through, worse times, right? It was almost filing for bankruptcy. They have sold, hospitality business and, reduced their debt. So financially, it's in a much better position. A guidance cut here and there, I think, may not impact vendors because we have to also keep in mind that the deal that Coforge had with Sabre was a cost takeout deal. So in a way, it's part of the process for them to, lighten their balance sheet and improve their margins. As till now, we have not heard any impact of that on Coforge, on that deal ramping up.
Okay. All right. We'll leave it on that note. Abhishek, thanks very much for joining in. Good to get that perspective on a bunch of IT stocks. So mid-cap IT, still his preferred pick over large caps. Let's quickly take a look at a lot of the stocks that we put out for you, stocks and news, and how they're doing in the pre-open. Plenty of order wins today. Obviously, there's Aurobindo Pharma, there's Fortis, which is expanding its presence in UP. Ather's numbers have been looking good in terms of just where they stand. The sales volumes that they've showcased. We've got Clean Science up for you. That's expected to be a large block with promoters selling a big chunk of their equity. India Cements is in focus. Nigel's been telling us that Ultratech is expected to sell a little over 6% stake in India Cements today. And these were the blocks from yesterday, where the buyers and sellers' identity is now, well established. Now the order wins. Yeah, let's look at RailTel. There were a bunch of other names. And also Arvind Fashion should come up because there's a new appointment there. The new CEO was earlier at Levi's, and she's now pulled in, I think it was the head of marketing, who's joined Arvind Fashions as well. So, yeah, small little moves here and there. Jupiter Wagons is the one that's reacting the sharpest in terms of news flow, and that's on the back of an order win. So those are some of the stocks in focus. Let's go back to Sudarshan. He's looking out for some interesting brokerage views, I think, on Bajaj, Finserv and Hexaware. Morning, Sud.
Morning, Surabhi. So Jefferies has initiated coverage on Bajaj Finserv, and call is buy and target is 2450. It believes that some of the tailwinds for the company are first, lower rates, second, improving profitability in life insurance business, and profitable growth and expected motor third-party premium increase in general insurance biz. And also it believes that there will be a limited impact from the exit of Allianz business and entry of Geo Finance in the sector. Overall, it expects 22% CAGR in core earnings over next few years. Next one is Hexaware Technologies, where Nuvama has initiated coverage with a buy call, and target for this is 950. It believes that company will continue to outgrow and outperform mid-cap and large-cap peers, and growth is expected to be driven by first, revenue base of the company is in a sweet spot, and it has a very strong client base, and it has strong presence across verticals and services line. Even cash profile is looking very robust. Over CY24 to 27, it sees revenue CAGR of 11% in dollar terms and margin expansion of 250 basis points. And as far as valuations are concerned, it's in line with mid-cap peers like LTI, Mindtree and Mphasis.
Both those stocks are moving, so you've picked out the hot ones. 4% up on that name, and Bajaj Finserv is a nifty winner.
I mean, this is a very good start, right?
Spicy soon.
90 points on this nifty.
Yeah, that's good.
360 odd points. Actually, very good start as compared to what it was looking like in the morning. Gains beget gains, I guess, and there is that momentum which has slowly started to build up in many pockets, especially mid and small caps, and I think that's happening right now. So what do we have? The first rates are up on your screen, 25,114, 55,970 is where the Nifty Bank is at. You've got the sensex, the mid-cap index and small-cap index is all starting up as well. 0.25% of the mid-cap index, and I think you've got the small-cap index, which is higher as well. So this is a decent start. 25,100, 25,160 is the 61.8. That's a retracement from the highs to the low. So another 60 odd points to go. What do we have? Nifty heat map should come up on your screen, gives you a quick sense of where we are likely to start, and then we'll pick it up from there. So the first look is, okay, a lot of financials there. Nifty Bank was down 0.25% yesterday, but today, this morning, it's mostly all financials, at least on large caps, which are occupying the green list there. On the downside, you've got coal and HUL and Nestle, etc., which are coming off. But it's largely up in the green. Some almost 30-35 names are higher, with the minority in the red this morning. Surabhi.
Absolutely, and it's those brokerage notes pulled by Sud. Look at Bajaj Finserv, 1.5%, almost 2% actually now. Nearing the 2,000 mark. Jefferies' target is just about 2,400. So that's a stock on the move. The life insurers are doing very well, actually. Even SBI Life, HDFC Life, the life insurance stocks. Remember, today is the GST rate rationalization meeting, the GOM meeting. And the expectation is that life and health insurance may actually be moved to nil, to no GST at all. And I guess there's some buzz rubbing off on some of these stocks. Beyond this, Reliance is a big winner, 1% up. Bharti Airtel, 0.5% higher. ICICI Bank. So the big boys are actually chipping in quite nicely today. There's Kotak Mahindra Bank as well. There is IndusInd Bank. So financials are looking quite okay. On the flip side, there is Coal India down about 1%. A lot of consumer stocks are cooling off. Lever, Tata Consumer, Eternal, Nestle, all stacked up. Even the auto names, after having done the GST pop at the start of the week, it's a little quiet as of now. Hero, Maruti, these are stocks on the lower side. 35 up on the Nifty, inching towards 25,100.
Well, the stocks that are really catching your eye, just take a look at Nazara Tech. The street clearly believes that, the risk to the business is large. Yes, operationally it doesn't affect them because the company that they've invested money in, that's accounted for after the operating profit. So the risk is that on that investment they've made of around 800 crores with some convertible shares that could amount to another 200 crores. So between yesterday and today, the stock actually has lost close to around 20% of its market cap. Big downtick is what we're seeing on that one. Clean Sciences, we're expecting that trade to take place. That's out of the way. Now I'll track the low of the day and see whether or not that can be a recovery because, sometimes these deals need to get out of the way and then we'll have to see what happens from here on. So for the time being, the stock is down close to around 7%. Let's see if there is a recovery on the horizon. The other one that I'm looking at is Jupiter Wagons. Auto Win, Street likes it, moving up on very, very large volumes. EQ Lighting, that's another stock that's doing well this morning. So that one, in fact, is moving higher on rather good volumes as well. It's following up yesterday's move with today's big move. Niva Bupa, that's another stock that's come on your radar. Just take a look at that. Good move is what we're seeing on that name, on decent volumes. And Anil Ambani Group stocks, Reliance Infra and Reliance Power, both of them saw a very, very sharp correction. Well, both of them now have recovered a goodish bit. So that stock as well is up and about in today's trading session. And MIRC Electronics, that's the one that Nimesh had told us that there's a pref issue coming. Now you have some large investors that are willing to show them the money. Let's see how the business turns around. But for the time being, that one is up close to around 5% or thereabouts. I'll tell you what, this 25,100 mark is crucial. If we can trade above that mark, given that it's a weekly expiry, the bears will get stumped on the wrong side. Because even in yesterday's trading session, 25,050 call had a fair bit of open interest built up and the premium out there was declining, though you got the direction right.
All right.
I'll keep an eye out on that mark.
34 points. I mean, we started sharply higher and now I think we've come off actually. So the high so far today is 25,140 and we're about 60 points off the day's high. So far already. At least let's see. I mean, last 2 days we've basically have had the market not opening higher. Actually, 2 days the market's opened slightly sideways, lower. 940, 45 starts to pick up and turn around. The biggest volume-led gainer is Swiggy. Swiggy is up 3%, 433 on that name. Godfrey Phillips is coming up with about a 2.5% move. It's got very large volumes on it. Ixigo is something which is coming up 3% higher. EQ Lighting, 4%. I mean, EQ, Nazara, etc. is all was on Hormuz's volume and delivery numbers and stats which he put out. There is New India Assurance, I think, which is starting about 6.5%, 7% higher. So, again, it's got volumes. 1.5 million shares on New India Assurance already, which is coming up. And Bluestone was a mover, 5% yesterday. There is very little float. This is a new listing, by the way. Very little float. 517 or so was the issue price. Stocks at about 590 now on Bluestone at this point. There's India Cements, which is up about 3.5%. SML Isuzu is up about 5%. Zuari has been doing well. Zuari is up about 4% or so. 362 coming through. And Niva Bupa, GIC, RE, etc. are some of the other names which are coming up with decent size gains. You go down the list, volumes start to come off quite sharply. Ola is down 4%. Ola is at the number 2 spot in terms of volume-led losses this morning. So 2 days in a row, stocks up 25, 26%. 100 million shares already, 5% down. And of course, the others we highlighted, there is Clean Science and Nazara. Indigo is coming up, so keep an eye out on Indigo, which is down about 2.5%. It's the 4th largest volume-led loser, 6,019 or so on Indigo at this point in time. 27 points on the Nifty is what you have at this stage. Nimesh Chandan is with us, Chief Investment Officer at Bajaj Finserv AMC. Nimesh, good to have you with us here. Thanks very much for your time. As a CIO, Nimesh, would you want to back consumption as a theme? I I mean, I'm assuming, I mean, if you're running a fund, I mean, you have exposure. It's just a matter of whether upping it, going overweight a little bit, or sort of, you know, staying market weight, underweight. How would you position yourself with exposure to consumer? And I say consumer, I don't necessarily mean staples. Actually, I don't mean staples. I mean the rest of the consumption pack.
Good morning, Prashant, and happy to be on your show. A few months back, I was at your studio and I had said that I am bullish on consumption, everything from groceries to real estate, and we maintain that view. There are many triggers this year for consumption uptick, and we'll have a very good festive season. The structural trends for consumption were anyway positive, but now because of the tax benefits through fiscal policy, through rate cuts in monetary policy, through pay commission revisions that are coming, through GST cuts that are coming, I think there are many triggers, positive triggers for cyclical uptick also in the consumer businesses. So I still maintain that everything from groceries to real estate is expected to do well this year. We just have to see which one will do well this quarter and which one will start doing well next quarter.
Yeah. So specific, and that's a good call, Nimesh. So congratulations. I mean, you were not early, you were actually exactly the right time in that sense. Where will, what should one focus on? Is it slightly, is the mass end, is it the slightly premium end? Where do you think this will show up? All these triggers that you're talking about.
So I think we are out of that K-shaped recovery that we were talking about. Now rural is doing well. And I think because of tax benefits, you will see lower income, middle income also starting to do well. Urban consumption, at least some of the companies have said that the urban consumption is now picking up, especially on the FMCG side. So this is actually a beginning of a more secular, more broad-based move in consumption. Obviously, there are some items which move first. For example, groceries, quick commerce. So FMCG companies would start showing the signs first, then you will start seeing it in discretionary spending. And especially for this, the festive season, I think consumer discretionary and real estate will see good times. So that's what we expect. Many of these companies have underperformed for the last 2 years. So valuations are like at their average or below average. And during an upcycle, we know that these companies go to very high valuation because of the kind of businesses they run. They are brand businesses. There is strong moat around them, high cash flow companies, balance sheets are light, and in fact, cash rich, return ratios are good. So all these aspects, when quality companies start doing well in momentum, then you see valuations going up much higher. And we know that people start looking at PEG on a 2-year basis or a 3-year basis, rather than focused on just the PE of these companies.
Nimesh, hi. Good to have you on. And, you know, as we have this conversation with you, the sector of the day really is insurance and life as well as non-life. All kinds of stocks are up and about. Let's, in fact, pick this up. On the big screen, the big cap screen, obviously it's SBI Life stocks up on your screen. HDFC Life is doing really well. Bajaj Finserv is doing very well. But even beyond, I mean, look at the standalone health insurers, Sahi as they're called. Many are showing green today. Star Health, about 2%. Niva Bupa, about 2% as well. Even Go Digit, last I checked, was positive. Yeah, 1.5% up on Go Digit as well. So, I mean, the buzz has been that they look at absolutely no GST on insurance, both life and health. But we know that industry has been saying that they would want to continue to get the benefit of the input tax credit. So, you know, maybe a 12%, but if 12% goes, then can it be a 5% slab, some slab, along with an input tax credit? That's what the industry has been asking for. So, Nimesh, what's your thought? You know, the sector off and on gets caught up in some sort of a regulatory storm. But here, if the incidence of GST is lowered, can it have a meaningful impact on volumes, on revenues for insurers?
So, last time I had an argument with you on consumption, that consumption in FMCG is looking good. Now I can tell you that BFSI will join the party very soon. So we will see valuations are attractive in this space. Obviously, there will be certain stocks in every space which are a little expensive. But looks like BFSI is now something which will start doing well. Primarily, we are focused on domestic stories. So that's why consumption, domestic healthcare and BFSI come in our radar. But within BFSI, you see that there are signs of improvement in most of the pockets. last year, this sector was under pressure on so many things, like insurance under whether regulatory uncertainty, or in banking, there was a slower credit growth and pressure on NIMs. And in microfinance and some of these NBFCs, there was pressure on NPAs and what is the cycle there. But now last quarter actually saw much of everything getting discounted in the prices. From here on, we see improvement there. So regulatory hassles, I think, are over now for insurance. From here, we see a good move in insurance sector overall. In BFSI, we expect that from here on, we see pickup in credit growth. The NIM pressure starts coming off from here on, and asset quality is not bad. So we see this holy trinity of what we call as the banking trinity, where credit growth, NIMs, and asset quality all start showing some positive, and the stocks are at very attractive valuations.
Okay, all right. Hi, Nimesh. Good to have you on the show, and good to hear your thoughts as always. One point is this promoters cashing out. What is your view on it? You know, it's getting a little excessive. Barely the result season goes, and wham bam. We could argue that there's enough liquidity now. Market is showing depth. Is it worrying you, or would you look at it positively?
So neither side, actually. I'm quite neutral right now on it. Yes, I know the pipeline of some of the money in terms of whether it is IPOs, QIPs, stake sales or private equity selling, and all that is quite rich in this year, but so is the flow. I mean, we are at this level when I think FIIs are underweight on India the most among all the emerging markets. I think people are underweight in India the most. Some of the selling that started in last September still continues, not with that intensity, but it continues to some extent. But if you see, whenever it comes to some deal is coming on the table today, some good companies are coming on the table today, there is huge amount of oversubscription in them, whether it is from FIIs, whether it is from DIIs. So right now, I'm not worried. I don't think it will immediately put some pressure on the market. But yes, if domestic flows starting to come down and then this pressure coming in, then possibly we see some pressure on the secondary market.
Okay, so you're not too worried as of now, at least. Got that. Nimesh, what about this quick commerce market? That's heating up, right? You have Eternal. Who would have thought? It's 3 lakh crore now. Some believe the journey is just starting. Swiggy, the other listed entry, is at 1 lakh crore approximately, and Zepto is raising a fair bit of money. Ramdev Agarwal joined us, and he has been quite bullish on this theme. What do you think about it? We're getting a little bit more lazier, I think so. Everything is on the click of a button. Do you think it has more to go?
So, I'll just first give a more broader view that we are positive on a lot of these platform businesses which are consumer oriented. So we love them because they own the customer. They have the data about the customer buying patterns and they can milk them very well. In especially food delivery or quick commerce, one needs to focus mainly on the commentary on competitive intensity. If you see, much of these stocks came under pressure somewhere around January when there was a talk, almost everybody was complaining about competitive intensity, price cuts and all that. Now, from this quarter onwards, you start seeing the opposite commentary that the competitive intensity is going down. Players are more disciplined in their pricing and hence people are able to make some margin on them. Obviously, some companies who want to raise money will also want to show some good numbers before they hit the market, that is the IPO market. So I think this space is now what headwinds we saw in competition seem to be abating, seem to be alleviating. And then from here on, we should see a good and smooth growth for them. The overall space has anyway 50-60% compounded growth rate for many years. So growth is there. It's only have to worry about how much they can charge a customer, and that depends on the competitive intensity. So that's one focus area.
Okay. All right. Got that point. Just a quick glance at the markets. Quite, quiet actually. 20 points. That's all we have on the Nifty for now. Nimesh, okay, so finally, let's talk about the whole upcoming festive season excitement and the fact that it's coinciding with this GST bonanza as well. We've already spoken about consumer, but within that, do you want to narrow it down to what else or how else can one play for this big consumer revival if you indeed think that it'll happen in the coming months?
Yeah, so some of say the fastest growing or immediately what you will see start seeing good numbers is FMCG and quick commerce. Festive season will lead to better times, I guess, in real estate and in the consumer discretionary space. So white goods, anything related to real estate, whether it is building materials. You have home improvement things like paints, wires, cables, faucets, tiles. Those players will start benefiting from the uptick in real estate and more bookings and deliveries there. With GST cut, with interest in spending more, I think even the NBFCs which are focused on the consumer side, the banks which are focused on the retail lending will start throwing some very good numbers. So overall activity picking up in the economy will benefit BFSI also. So these are some of the pockets that we find very interesting. Obviously travel and all that, they continue to do well. So anything related to hotels, travel, hospitality, they are doing very well. So we expect them to continue to do well. As I said, you have to just decide which company starts doing better now and which one starts doing next quarter and where I can find a good valuation gap.
Okay. All right. Nimesh, we'll leave it on that note. Thanks very much for joining in. Great conversation as always, and we look forward to the next one. You have a good day. Okay, let's get back to the market and a couple of interesting buzzing stocks. Let's pull up Ola and see what Ola is doing today. Also look at Ather. These were some of the stocks on our radar. Ola had a superb session yesterday. Today it's undoing a little bit of that. It's down about 5% as we speak. Ather is up 1%. So it was earlier telling us about Ather's numbers, and the numbers were looking pretty decent. But he's again tracking the moves in Ola and some very, very interesting price and volume action of late in Ola. So what's the latest that you're picking up?
So after 2 days of big gains in which Ola Electric stock had seen a surge of more than 30%, today the stock is under pressure. And I've tried to look at the Vahan registration data, and it throws up an interesting trend. So first, as of August 20th, total registration for Ola Electric is of 9,500 units. And against this, Ather's registration has crossed more than 10,000 units. So it will be first time, if the current trends hold, it would be for the first time that Ather's registration would be more than Ola Electric in a month. And also, Ather will pip Ola and some of the incumbent players to become the number 2 players amongst all the electric two-wheelers. As far as yesterday's trading volume and delivery data is concerned, yesterday we saw more than 100 crore shares of trading volumes in Ola Electric, but of which only 18% was marked for delivery, and that was lowest in last 4 months. Amongst brokerage views, we have total 6 coverage, of which 2 brokerages have a buy call on Ola Electric and 2 have a sell call, and highest target price is 63 and lowest is as low as 40 rupees per share. We'll have to see how does it move ahead.
Okay, all right, sir. Thanks a lot for that. Well, the other big mover today is Clean Science. And the promoter entities, Ashok and Krishna, they reportedly have sold close on 24% stake in the company. The floor price was around 1,030, which was a big discount to yesterday's price. And the rough size was around 2,600 crores approximately. The promoter entity, remember, they held close to around 25% stake in the company as of the last reported numbers, with Ashok holding around 12.8% and Krishna holding around 2.6% in individual capacity. Krishna Kumar, well, the HUF out there, they have around 3% stake. The stock has already come off drastically from the top, but just one observation, if you can get the volume chart out there, the total block size was around 2.6 crore shares. As I'm checking right now, the total volume that's traded is nearly 6-7 times that. So we'll try to get some clarity out there, but there's massive volume that's taking place. Pull up both the exchanges, you'll see that in fact volume is much higher than the 2.6, 2.7 crore shares that we are working with. So some clarification from the management will be something that we'll be looking forward to, because volumes are abnormally very, very high. Nice.
Absolutely. And we'll have to get this clarity about the block in terms of how much has actually been done and what's going on with regards to the Clean Science trade, really. Well, I think, markets, of course, otherwise are looking pretty solid through and through. With lots of sort of new stocks into the mix now. Pull up something like a Happiest Minds. It was not there in the mix. It's up 7%, Happiest Minds, 634 coming through right now, and almost approaching a million share volume mark now on this one. These insurers, Neva Bupa, New India, etc., I highlighted earlier today. Swiggy continues to do better and better. So it's up another 4.5% now, and almost 4.7 million shares now traded. Look at Prince Pipe. Again, volumes are, it's just outside the top 10 volume list, but volumes are high enough at this point. 7% on Prince Pipes, about 350 at this stage. And of course, I think we highlighted SML Isuzu. Foseco India is up about 2.5% and so on and so forth. So that is the overall picture, which seems to be coming through. On the downside, actually, it's 1,600 stocks higher and about 900 stocks which are lower. Things are sort of, settling down. Nazara was down almost 10-11%, is down 8.5% now. Ola continues. Sud just highlighted 5%. And there's Clean Science, of course, which is down about 5.5%. We'll try to get you clarity there. Travel Foods was locked up yesterday. I think it was up 10% by close. It's now in flattish, 0.81% lower. And protein is something which we highlighted as a big outlier mover from yesterday. And we highlighted the price action volumes, etc. Protein is down 2.5% on some 70,000 shares, which are coming through. So lots of stuff. Carborundum Universal, right? Again, another name which Hormuz highlighted in part of his link is down 4%. Was one of the, I think it had as Hormuz said, the single largest gain yesterday, single day gain. So there is a bit of reversal. Another one was Jamna Auto, which went up very sharply yesterday. That is down about 2.5-3% as well. So lots of stuff moving around. 20 points, though, on the index, off about 70-75 points from the opening gap up on the Nifty. Surbhi.
Lots and lots of stocks moving, absolutely. But for the time being, we're going to put the spotlight on another corporate conversation. And the company on our radar is Wockhardt. We have, in fact, Mr. Khurakiwala joining in, founder and chairman of the company, to take a couple of questions. Sir, before we get started, I just want to outline for the sake of our viewers a couple of the key areas that, today we are seeking clarity on. First, of course, the market is very, very keenly focused on the progress of the company's NCE portfolio, new chemical entity, basically novel drugs that Wockhardt is looking at developing. And then, of course, we need an update on what next. We know that Wockhardt has exited its US generics business. So now what's the next focus area in terms of growth? And finally, of course, the path to better profitability. So let's discuss all of this with Mr. Khurakiwala. Mr. Khurakiwala, let me first start with the novel drug discovery, right? Because the market is very keen on knowing the progress that you're making with Zynic. And this is the drug that promises to take care of superbugs, right? Absolutely drug-resistant bacteria. It's proven to, or at least it's showing very good promise in the trials. By when are you expected to file this, sir? And what is the opportunity here, the market size and the opportunity?
I think Zynic is our main game-changing drug in antibiotic treatment. And as you know that this covers entire gamut of gram-negative organism. And probably it is coming after 40 years in this class as a new antibiotic. We have already filed to Indian regulators sometime in March, a few months back. And we are ready to file to US FDA next few weeks, maybe by middle of September. And we expect the product to be available in India by middle of next year and worldwide late next year or early following year.
Okay, so that means 2026 is going to be quite a landmark year for Wockhardt as Zynic finally reaches the market. So, sir, just take us through now the revenue implications and how this will play out. Will there be an out-licensing deal? Like I said, if you could just tell us what is the global market size? And in terms of revenue, 26, when the drug comes to market, how much would you hope to earn?
See, Zynic has an enormous potential. Yeah. For example, today about 5 million people die every year because of the resistance, multi-drug resistance. And that is where Zynic will work in 75% of cases. In India alone, about 1 million people die every year. So from that context, we are talking and we had shared with some of the investors the potential which is in the millions of dollars over a period of time. It has a patent up to 37 in the US and other countries. So it has a long way to go. And we would be establishing this in India immediately once we launch it. And US and other markets, we are considering the alternatives that in some market like US, we may like to do it ourselves. And maybe many other markets, we may find as suitable partners.
So one full year of time in the market, Zenek, what would be the possible revenue, global revenue?
Let me just put it to India, because the US, we are still trying to discover what kind of first-year revenue, but we know the peak revenue would be significant. But I think we expect in India for full year available revenue of something around 150 crores or so.
Okay. All right. As you said, it's a big one. It's the biggest in your portfolio, which markets are very excited about. Mr. Korakewala, good morning, sir. Prashant here. Thanks for joining us. Let me just continue with that strain of thought, which is these novel entities. So talk to us a little bit about the other one, 4282, which I think phase 3 has been initiated under US FDA guidelines. And the other one is WALK 6777. Just give us an update on both these as well.
The 4282, we have completed Indian clinical trials. So we'll be completing in October. And we should be filing to our local drug controller sometime early next year. And that would be the second drug after Zenek. We would be in the market in India in 26. As far as the 6, and that is also to initiate in a gram-negative. So there is a very complementary portfolio of 6282 and Zenek. 6282 deals with initial infection where existing drugs are resistant or they have a high side effect. This is a very safe drug. And whereas a Zenek is when other drugs don't work, that is where you use Zenek. So that's as far as the 4282 is concerned. 6777, we have just completed phase 1 clinical trial with the health HMI of US health organization. They invested about $10 million to do it because there was a need. It will be the only once-a-day antibiotic in the new class, which is also enhancer like Zenek. And we would be initiating a phase 2 clinical trial this year, in next few months. And thereafter, we will see and continue with the phase 3 clinical trials.
Right. This is all what you mentioned for 6777 is in the UK, right? Phase 2, phase 3.
Phase 2 clinical trial we may do anywhere because it is generally accepted.
Okay.
But phase 3 would be a global clinical trial, including US, Europe, India, and many other countries.
Okay. And similarly, like you mentioned, that 150 crore number for Zenek, could you talk to us about what is the potential here of a year's worth of revenue from these two? I mean, but they're further away, right, as compared to where Zenek is in terms of the launch, etc. Hopefully.
Yes, I think Zenek would be the revenue driver for next 3 to 4 years, followed by McNef we just introduced few months back in India, and that would be a very significant major driver in India. And 4282, which will be marketed within 1 year, would be also a revenue driver if you are looking at 3 to 4 years' time. Whereas the 6777 will take another 4 years before it can hit the market.
So just give us a second. I just want to clarify something that the ticker had flashed here on Clean Science. Now, Clean Science that we know, promoters have sold a large chunk of their equity in a block trade today this morning. But volumes seem to be even higher than the exact volume of that block. And what the company has told us, I mean, this is Clean Science 2 CNBC-TV18, that there seems to have been some sort of a punching error by the trader. We'll get Sudarshan in on this to explain to us exactly what has happened. But it seems that there is a bit of a punching error there, which is responsible for extraordinary volumes on Clean Science. Though, yes, volumes anywhere high because of the block trade that happened in which promoters have apparently sold about 24% stake. This is, of course, something that we were highlighting in our pre-open session as well. Back to Clean Science with more details in just a bit. But Mr. Khorakiwala, so you've given us some idea about how your novel drug discovery portfolio is shaping up. For the rest of it, sir, now that you have exited the US generics business, just take us through for this year, top-line growth, your focus markets, and that margin improvement trajectory. I mean, whenever we speak to you, there is always a guidance of looking at 20% sort of margins on a sustainable basis. Will that happen this year itself? And what can we expect in terms of overall company growth and EBITDA?
See, in terms of top-line growth, we do expect double-digit growth, combining all aspects of situation. And we will certainly have at least a 200 basis point improvement in our margins.
So, sir, what sort of an improvement in margins are you aiming for this year?
So I think we had last year a margin of about 14%.
Yeah.
So that should improve to near 16% or so.
16% this year, 200 basis points. And is there scope for further improvement? And also, again, in terms of focus, now that you are looking away from the US, which would be some of the core geographies for you beyond India?
We are very strong in Europe. We have our own companies in UK and Pinewood. And collectively, they do contribute about 2/3 of our business today. And we have a very healthy portfolio there of products. So generally, we introduce 6, 7, 8 products every year there. And they are growing, at least the UK is growing at near double digit, between 9-12% kind of a range. And Pinewood is also in a growth, but they are mid 5-6% growth state. So that is healthy. But very important is that our margins in UK is improving year-on-year basis, and that will continue.
Yeah. Just to go back to Zynex, again, I mean, this is obviously what you, it's a question actually for the FDA more than anybody else. You said you'd filed in the next few weeks. There's a lot of revamp going on in various US agencies, and I mean, the new health secretary has got pretty radical ideas for healthcare reform in the US. All that is not affected, I mean, anecdotally, has it affected rate of approvals, etc. at all, or not really?
See, we had 2 meetings in FDA in the last few months.
Okay.
One, we had a physical meeting in May in Washington, where we shared all the data which we had and wanted their response and reaction. And these were thousands of pages document we submitted at that time. Then they gave some issues for our team to work on it. And then there was another meeting, Zoom meeting in July, late July. And knowing everything, we would be in full compliance when we file it in September. What is good about this filing is that this most of the filing in terms of clinical CMC, purity of the drug, FDA is already aware of it. So we do expect a rather rapid approval of this product in 6 to 9 months.
That's very helpful, sir. So meeting in May and then a virtual meeting in July. And as you said, they're aware of the drug, etc. and details, and you expect rapid approval. So in the US market by late next year is what you said for Zynex. Thank you very much, Mr. Khorakiwala. Appreciate your time here on CNBC TV18. Thank you for joining us.
Well, I just want to make one point on Clean Sciences. When that block took place, we just mentioned that sometimes the street waits by for the block to get out of the way. And then, in fact, you do see a recovery because that is a bit of an overhang. On Clean Sciences, we did see initially a bit of a recovery. Then there was that doubt, what happened? Why was there such a large quantity that got traded? And post the clarification that we have put out that there was actually a punching area, the stock is up close to 10% from the lows of the day. So the block getting out of the way, clarification coming in from us here at CNBC TV18 about that punching area. And just take a look at the stock. Massive, massive recovery. I think the low of the day is around 1,070. The stock is now up close to around 2% or thereabouts. That large trade out of the way, stock recovery.
When did we last hear of a fat finger? This is the so-called fat finger, which is, of course, what has happened apparently, right? Punching error by the broker leading to extraordinary volumes, block deal of 24%, equity only. I mean, so that's the clarification which we've been carrying. Take a quick commercial break here. Arun Shukla of JK Lakshmi Cement will be with us to talk about the key GST reform. I mean, cement from, going down, GST rate and cement going down. What could that do? What could that mean? And, of course, demand trends from them. Coming up in just a bit. Okay, welcome back. 25,001, just under 25,100. 40 points lower is where the Nifty is now at. We're going to put the focus on pipe companies. As spotted Prince Pipe as a big mover early on. But Motilal has got bullish on the PVC pipe company names. And Ria has got details here. Ria, over to you.
Well, yes, Motilal has come out with a note on the PVC pipe companies today. They remain bullish on the overall space. Now, what they've said is that after a challenging year in the last fiscal and a subdued start to FY26 as well, they are expecting domestic pipe, the pipe sector appears to be at a cusp of recovery at the moment. And with the DGTR's recommendation on implementing anti-dumping duties on the imports of PVC resin and coupled with PVC prices stabilizing at bottom levels, a gradual price uptick is expected from here on. Now, this coupled with an improving demand environment, these factors are set to drive a gradual rebound from the second quarter of FY26. On the back of this, on Supreme Industries, they have a buy call with a target price of about rupees 5,350, and for Astral as well, they have a buy call with a target price of rupees 1,650. For Prince Pipes, they have a buy call with a target price of rupees 440, which is an upside of over 34%, and the stock also seems to be reacting positively, up over 6 to 7% today.
Okay, thanks a lot for that, Ria. Let's turn our attention to the cement space then. We have with us Arun Shukla, President and Director at JK Lakshmi Cement, who joins us on the show. Well, we're going to be focusing on three main points: the impact of GST rationalization, demand trends and the outlook on cement prices, and finally, what's on the company's radar? They want to expand, but is there any inorganic plan on their radar? Well, let's get straight to Mr. Shukla. Hi, sir. Good morning. Thanks a lot for joining in. First up, GST rationalization. I've been hearing this for the last, many years from the time GST was implemented, that cement companies wanted lower GST rates. Now, that's going to happen in all probability. What's your initial reading? Prices will come down to an equivalent amount. Is that correct? But it could help volumes at the margin.
Thanks for having me here today. Yes, of course, I think GST reduction has been one of the demand of our industry for so long. Definitely, it is going to improve demand position in India for sure, and that is going to benefit the cement industry. But I think we need to really wait for some time, because October is still, 2 months away. But yes, we are quite bullish about it. And of course, I think though cement demand is not that price elastic to a great extent, but still I think there is going to be uptick in demand with the rationalization of GST.
Okay, so you're optimistic on that front, because otherwise cement cost as a percentage of making a house, it's very, very small. And as you said, demand is mostly inelastic. Since you're expecting a volume push, and the first quarter actually you grew by close to around 9 to 10%, which is better than the industry. For the year, what kind of volume growth are you looking at? And in your core markets, what is your current market share? Around double digits?
Yeah, we are into double digit in our core market. All markets, we are into double digit. And of course, I think last quarter has been good for us, double digit growth. And as I told you during last conversation also, we are going to grow at a higher rate than industry. And hopefully we are going to maintain this growth trajectory going forward as well.
So for the year, industry is expected to grow at, I think, around 6 to 7%. Very roughly. You will grow by what?
6 to definitely, I think, a little more than what industry is going to grow at.
Fair to assume that you'll grow by at around 9%, sir, for the year, volume growth?
I think definitely we'll grow higher than that. And first quarter has been in double digit. Yeah.
Okay. All right. What about pricing, sir? After many quarters, last quarter, there were some signs that pricing is holding out after many dull quarters. What is your estimate in terms of prices moving here? And also premium products, as you had told us last time, you want to gradually increase it.
Yeah.
As a percentage of trade sales, how much does it go to?
Yeah. So on pricing, I think pricing, yes, though I think we are through a cyclicity of demand. July, September is typically low in case of cement industry. But still, I think prices are sticking little bit here and there, but more or less, I think price situation is better than last year. One. And second, as far as our premium cement goes, we are quite bullish on that. Our plan is to go to about 27 to 30% in coming months and years. And that is what we are working on. And just to let you know, in some of the market, our premium product proportion is more than even 30%, 35%.
Okay.
But there are some market where we need to improve, which we are working on.
All right. Mr. Shukla, I'm going to revisit the operational performance, but let's clear some of, the buzz out of the air. Are you looking at the South-based company in terms of inorganic growth? Because as of now, you'll have exposure North, Gujarat market, I think East market as well. Are you looking at some inorganic growth in South India? And let me narrow down as well. Could it be Deccan Cement?
So as I said before, our strategy is to really focus on inorganic organic growth, right? And that is what we have been doing. And we have announced some capacity expansion in eastern part of India. And our plan is to go to 30 million ton by 2030. And as I said before, I think there is nothing, no inorganic, opportunity which we are working on as of now. But as I said, I think if some asset which is strategically fitting into our overall direction, then definitely we'll look at that. But as of now, I think there is nothing which I can really disclose.
But have you all studied Deccan Cement?
No, I think we are not working on any acquisition as of now.
Were you all working earlier and that deal seems to have fallen through?
As I said, I think we are not averse of acquisitions, but that has to really fit into our strategic direction one. And definitely, I think value acquisition. We will not just go just for the sake of, having some acquisition. No.
So at what value would you like to go in for inorganic growth? What is the EV per ton should be for you make Mr. Shukla and the team at JK Lakshmi Cement excited enough to go for it? If you're doing inorganic growth, what should it be?
So I think the trend. As I said, I think, again, we have to really evaluate, all, facet of it, right? We cannot really put a value to it, but definitely I think that has to add value to our overall strategic direction. And yeah.
Okay, all right. It has to be strategic in nature. That said, you're currently around 16.5 million ton and you're headed towards 30 million ton.
Yeah.
With what all you've laid on the drawing board by FY 26, 27, 28, how does this capacity scale up? By 28, what will the capacity be?
So in the next, by 28, FY 28, we'll be adding about close to 4.5 million ton.
So you'll be approximately around 20 to 23 million tons. Is that correct?
Yeah.
So that's 7 million tons and that's a gap. That will mostly be organic in nature?
So it's all organic. Whatever plan we have, 30 million ton, is all organic in nature.
And there was some delay in the expansions, right? Are you confident now that those expansion plans are back on stream? There won't be any further delays?
Yeah, that is back on stream. No issue on that. And probably, I think, within a month or so, we'll be there at 18 million ton. So the plant expansion is already almost on the verge of completion. So 18 by that time.
And the Durg plant in East India, that starts getting commissioned by when?
Yeah, so we are targeting FY 27, and that is what I told you. In the next 2 years, I think we'll be adding at least 4 million ton.
And debt is currently around 1,400 crores. Where does it move to since you have an ambitious capex plan?
Yeah.
Where will it go, sir, from around 1,400 crores?
So you are talking of debt?
Yes.
So debt equity ratio, I think net debt equity, I think is going to be within 2.5. This is what our threshold limit is.
All right. Final question then. EBITDA per ton, you've done quite well. First quarter was actually much better than what you're guiding for. Yeah. For the year, give and take the volumes, the pricing as well as cost, because you've been focusing on the cost side as well. What will be the range that you'll be happy with?
I think our endeavor is to reach to 1,000 rupees per ton EBITDA by end of this year. So this is one. Second, I told you that volume growth, we are quite optimistic. We'll be growing better than industry. Second.
Okay.
And third, on cost front, a reduction of about 100 to 150 rupees a ton in the next 18 to 24 months' time.
Well, we appreciate you joining in, sir, and giving us clarity on, on how JK Cement is looking at things ahead. You want to outgrow the industry. EBITDA per ton moves to around 1,000 rupees per ton. And as of now, you're telling us that there is no inorganic growth on the anvil. Thanks a lot for joining in. Well, time to move back then to Vinay Rajani, the Senior Technical and Derivative Analyst who joins us from HDFC Securities. Hi, Vinay. Good to see you in. Well, what's your take with regard to the market's move today? It's actually encouraging to see the Nifty is holding about 25,100. Where are we headed? What's the fresh rate?
Yeah, good morning. So yes, gradually markets are getting strength, and for last 6 trading session, Nifty has been giving positive returns and almost 800 points rise we have seen in the Nifty. So yes, gradually resistances are being taken out. We are about 20, 50 and 100 and 200 days EMA. So technically markets are strong and have turned technically bullish on the positional charts. The entire fall which we saw from the high of 25,670 to the recent low of 24,370. 340 odd. The 61.8% retracement of this entire fall comes in around 25,160 odd level. So if Nifty were to sustain and close about 25,160, then it will negate the entire down which we saw in previous 2 months. So we are waiting for level to be taken out, and once that is taken out.
Vinay, actually, we'll try to get you back because I think there's a bit of an audio glitch, but actually it's a very good morning of trade because the Nifty has popped up. We started off with a gap up. That gap got sold into. And now, in fact, good solid move is what we're seeing. Holding high with a gain of around 75 points. Since it's weekly expiry, bears will want to protect this zone. 25,150 as well. That's the important marker that we're looking at. So we'll keep an eye out on that front. I don't know whether we have Vinay back with us, but I'll tell you what.
Yeah, I just wanted to mention, while we're looking at getting Vinay back, a couple of interesting stocks on the move. And one of them from the broader market is Jupiter Wagons, by the way.
Yeah.
Jupiter is surging away. It's on a fast-speed train, for sure, 12%. The order this morning is about 200 odd crores, and it's for over 5,000 wheel sets for the Vande Bharat. And the market usually gets very excited when there are Vande Bharat-related orders that are given out. And Jupiter is definitely a beneficiary of that. Vinay is back with us. Vinay, so you were saying, sorry, we lost you there. Quickly, on the Nifty, what's the advice and what are the trades, even beyond the Nifty, stocks or bank Nifty, just some trades at 10 o'clock?
Yeah, so Nifty is near to the 61.8% retracement of the entire fall, which we saw from 25,670 to 24,337. So 61.8% placed at 25,160. Once that is taken out, we can expect Nifty to move above the previous swing high of 25,670. So overall, Nifty is getting strength and above all key moving averages. So that's a good sign. And according to us, 24,800 becomes the strong support for the Nifty in long positions. As far as trades are concerned, we are bullish on for the short term, we are bullish on the IT and FMCG stock. So IT stock like Emphasis, which has been outperforming within the sector, can do well. 2830 should be the entry level. 2780 I would suggest as a stop loss in trading long. 2920 should be the target. The second pick I would take from the FMCG space, Marico, which has registered a new all-time high and has been outperforming the FMCG space as well as the Nifty. So Marico around 747, 748, one can go long. 737 should be the stop loss, and on the upside, I'm expecting a target of 780.
Okay. All right. Vinay, we'll leave it on that note then. Thank you very much for joining in. Let's quickly shift our focus now to the commodity markets. We have Manisha joining in with the latest. Manisha, so what's happening in your world this morning?
Yeah. Well, it's fairly good, really, when you look at the precious metals and energy especially. We're looking at some gains in the overnight market there. I'll start with the gold and silver prices because gold gained up by a percentage point and silver is up 1.5% overnight. Even platinum, which has been declining for most part of August, gained up by 2.5%. And we have the crude oil prices also up 2% in the overnight markets. Well, the Fed July minutes is what the street really seems to be looking at, and the Fed Fed seems divided over interest rate cuts in the month of September. Interestingly, there are concerns over inflation and the labor market, which the street is watching quite closely. But as of now, the markets have assigned an 85% probability of a September rate cut going forward. Well, the industrial metals are not doing so well. And it's a segment of markets, really, which is not doing so well ahead of that most important Jackson Hole symposium. So within that, it is industrial metals that is declining. Bitcoin has come off quite sharply from 123,000 of an all-time high to 113,000 at this point in time. And the dollar index as well, soft ahead of Jackson Hole meet there. Well, this is an important symposium and it begins today. It is Jerome Powell's 8th and final keynote Jackson Hole speech as a Federal Reserve Chair. And the markets will watch out. They're expecting that Powell perhaps could pack a punch onto this one because it is his last. It also is seen as a very important event, and this is the most important event ahead of the Fed September 16-17 meeting. So this is where perhaps the cues could come in from, and the street will be hinging onto every word onto this one. The backdrop really is about the slower employment, growth, resilient wages, and inflation rebound. So this is what we are looking at as we get into the Jackson Hole meeting right now. The Fed chair is also expected to make remarks about the future policy path. Remember, COVID, before COVID and after COVID have been three different worlds. And is something going to change going forward in the next 5 years? Some sense could come in from this. Also, there is expected a conversation on central banks' independence. That perhaps could dominate the conversations as well at this Jackson Hole meeting. Powell and various other central bankers are expected to speak on that. The central bankers from across the world also are gathering at this Jackson Hole meeting. And what is the theme given out this time in sense of study, research and remarks would be in sense of labor. That is what the economic policies and research are expected to speak about. It is going to be about labor markets in transition, and that's exactly what the next 2 days are going to be about. We will hear from global central banks, Powell himself, and that is what the street will watch for cues.
All right. Thanks very much, Manisha, for that. There's commodities in focus. We slip into a quick commercial break here. We're going to come back with more stocks in focus. Clean signs. I mean, what's happened since the morning? Huge amount of volatility, of course. That block getting done, but you know, as data shows, against 24% blocks and 56% of the equity traded this morning. Nazara is the other one, which is down about 6%. So coming up in just a bit.
Welcome back. Let's focus on a couple of stocks. And to start off with, let's focus on clean science. Really not a very clean trade. Perhaps we can say that, Hormuz. What happened? We were always saying that, promoters are going to sell a large chunk of their stock. But trade was definitely not clean. Tell us what happened.
Definitely not clean enough, for sure. And the last 40-odd minutes have been anything but clean for clean sciences. Starting off, with as soon as market opened, on expected lines, the first tick that came around was the fact that 20% equity had changed hands, which was about 2 crore shares. The initial plan was for a 24% stake. And the stock fell on expected lines. The stock was down around 7%, but 10 minutes later, the details start to emerge that as much as 56% of the total equity has changed hands. Of course, nobody knows who's the buyer, who's the seller. And then around another 10 minutes later, around 9:40 is when CNBC-TV18 spoke to the management. The management confirmed to us the fact that it was a punching error that led to these extraordinary volumes. And it was punching error from the part of Spark Aventis that triggered these extraordinary volumes in the stock. And they also confirmed to us at the same time that it was only 24% equity that has changed hands. So that 2.5 crore shares that were supposed to be traded as part of the original block deal plan, that ended up becoming 6 crore shares because of this punching error that the management has cited. Of course, we still don't know who the buyer is, who the sellers are. Of course, whether it's reported yesterday that the promoters were going to sell. And then look at the price action that takes place. Around about 9:50, the stock, which was at one point in the initial ticks, was down around 7.5%, recovers from the lows, turns positive and trades with gains of around 6%. And then within the next couple of minutes, gives up all of those gains and is now swinging between gains and losses of anywhere between 1% to 3%. So that is the kind of drama that has transpired with Clean Sciences. We'll get you more clarity as more details continue to emerge over the course of the day.
I'm still trying to wrap my head around this. Thanks for that, Hormaz. 2 crore and 6 crore. 2 and 6 are really far away on the keyboards. I don't know how the punching error happened, but it did. And a costly one, perhaps, at that. Thanks, Hormaz. Vinny is joining in. Nazara is still falling. Vinny?
Absolutely, Nazara is still falling because finally that bill that we were talking about yesterday, that's been passed in the Lok Sabha, right? That's the online gaming bill. Now, this will be banning real money gaming, while this will give a boost to esports segments for most of these gaming companies. Now, the stock is down 20% in just the last 2 days. Yesterday, it was down almost 13%. Today, also around an 8% fall that we're seeing coming in. Do not forget, Nazara has a 46% investment that comes in Moonshine Technologies, associate company of Nazara Technologies. Right now, not a part of their revenues, but the risk that came in terms of the investments that we were talking about yesterday as well in Moonshine Technologies of around 800 crores. The company had also spoken to us yesterday and said that, if this ban comes in, then there is a risk of writing off that would come in for Moonshine Technologies investment of 800 crores. And now this ban has come in. So that risk is something that could play out for the company. And that is why the stock continues to see a fall in today's trading session as well.
Okay. All right. Vinny, thanks very much for that. We'll take a quick commercial break here. Lata comes in on the other side of this break, and she'll be speaking with RBI MPC's external member, Saugata Bhattacharya, on the minutes of the last meeting. Stay tuned.